RBC Capital's Tom Narayan came out with a new price target for Tesla. He's keeping his outperform rating and a $297 target, but what is important for Tesla investors is the why, his reasons for his bullishness. Tom is forecasting that Tesla's energy business is going to be worth more, and in fact, he says substantially more than the standalone auto business. This, despite them adding and including autonomous driving for FSD and robotaxi to the car segment. Today, we have Larry Goldberg joining us, and Larry's a multi-entrepreneur, and he's one of my regulars joining us every Friday. Thanks so much, Larry.
It's great to be here with you.
Appreciate this. This is a story, something you've been researching quite deeply, the energy business. You've been for many months now talking about how big energy is. So let's cover a little bit more about what this is all about. So this is the news here. RBC says that Tesla's utility battery business may be worth more than the car business. And Tom Narayan keeps an outperform rating, $297 price target. But he's saying that the battery storage facility tour, or his takeaway from that tour, is that the unit may be worth substantially more than the company's standalone car business, even though it continues to view autonomous driving for full self-driving and robotaxi remains central to the investment case for the stock. This is what he's now saying in a new research note. What do you think, Larry?
He makes a very good case, and the numbers are very compelling. If you actually look at the numbers that Tesla are giving us, you get to understand just how enormous this business is. Let me show you what Tesla are saying, and then I'll translate it to dollars and cents. So if we look at, let me see if I can show you entire screen, and I'll share it. Can you see my screen?
Yes.
So this is a presentation. This slide is taken from a presentation that Tesla did for us on Investor Day last year. Was last year or the year before? Anyway, on their last Investor Day. And what they show is the target for storage for a sustainable energy economy, global economy, is 240 terawatt hours of storage. 240 terawatt hours of storage. Mm-hmm. Now, that number may not mean anything to you yet, but I'm going to try and put it into context. But before I do, what I want to do is show you what Tesla target for their own production of that 240 terawatt hours. Here it is. 1 terawatt hour of annual energy production. Just 4% of the world's requirement. Mm-hmm. Okay. Mm-hmm. Now, what does that mean in dollars and cents? Well, to put it into context, what do you think the production for the whole of 2023 of energy storage was?
Yeah, I don't remember. I don't know.
Yeah. Well, in 2023, they produced 14.7 gigawatt hours. 14.7 gigawatt hours. So what they're telling you is that they didn't do more than 1.4% of their targeted energy production. So by 2030, they're targeting something towards the 1 terawatt hour of annual energy production. And they're doing 1.4% of that. And how much did that translate to in revenue? Well, the energy revenue last year, 2023, was $6 billion. Mm-hmm. That's, it's negligible compared to the revenue that they did in autos, right? It's like 7% of the auto.
It's not negligible. It's still it's significant now. It's past 5%. Right. So
right.
Yeah.
And let's look at their profit. Their profit, that was fairly profitable. They did a total revenue of about $5.4 billion, and they actually produced about $1.14 billion of actual profit. Well, when you look at that profit margin, it's negligible.
Mm-hmm.
So it's like 14, 15%. So what kind of a business is this? It's a small percentage of the vehicle business in terms of revenue, and it's an even smaller percentage of the business in terms of profitability. However, what people don't see when they look at that energy revenue profitability is that there is 3 times as much profit in the deferred profit margin of those sales that they will be earning over the next 3 to 4 years. In fact, almost the entire revenue profit of this year will be earned from the sales of this year, next year, in our 2024. Because that deferred revenue represents the earnout that they will do against their performance, which is not taken into account in the current year revenue. So that's just going to build up over time, and it is 3 times the total profit they recognized for all of the energy last year. What I'm saying to you is that we haven't yet even begun to see the revenue, but the profit potential of this business, let alone the revenue potential of this business. So we're talking about a massive expansion of revenue, a multifold expansion of revenue, and even more dramatic expansion of profitability. So how does that translate? If you're looking at 1 terawatt of energy, you're looking at billions, hundreds of billions of dollars of revenue and many tens of billions of dollars of profit. And you're doing that in a very short cycle of time. We're just beginning to see the start. It's just in the startup phase. The first factory has not yet reached its peak production. The second factory hasn't gone into production. And I predicted and still predict multiple new factories in the short-term horizon in Europe, maybe in South America, certainly in Mexico, and definitely additional factories in Asia, in the Asia-Pac area. And in order to get to the trillion, the 1 terawatt hour annual energy level of production, we're going to need all those factories. And, they will scale very rapidly after after Lathrop experience has been earned and we get to a high level of production. That makes sense to you?
Oh, I love it. No, okay, you've explained it. There's a lot here that I did not know, and you just did it very well. Okay, so a couple things. One is I agree with you, right? So the target is 1 terawatt. They're only producing such a tiny little percentage of that today. They need to create more factories. And so they've got the Lathrop not yet fully scaled. They've got mega factory in Shanghai that started to be ready by the end of this year.
Before the end of this year.
Before the end of this year.
By the end of this year, yeah.
But like you say, they're going to need to announce more Megapack factories. I agree with you. I think they're going to do it. There's a reason why he went and shook the hands of all these world leaders a year ago. Every country would want their own Megapack factory for themselves, and they're all vying for the next one, but they're all going to lay at that.
Yeah, there's rumors of a factory in Italy, and it just makes a whole lot of sense that factory would be a Megapack factory.
Yes, it's more likely it's a mega pack than an auto factory, which is some people are thinking it's going to be a mega pack factory. So they need to build at least one or two every year, right? And then what you explained here was that 2023 was substantial already because it showed up on the financial statements because it is material already, right? Over 6%, you said, and then the margins is even higher percentage wise compared to the auto. But what you explained was that it does take 3 more years for a lot of the signed contracts to finally come in as those revenues.
No,
So
delivered contracts, not signed,
delivered already. Interesting. Yeah.
Yeah, it's a very important point. What I'm saying is that what they have already delivered and
Gotcha.
built out and started to operate, there is almost
Deferred.
3 times as much deferred profit as they have already recognized. It's an amazing number.
It's like you can already put that in the books if you wanted to carry it forward, but you can't because of counting and all that. So the interesting thing is this: it's delayed. That's the only thing. But each year it sounds like it's small, but then it'll get bigger and bigger and bigger. The problem is that we have to wait. We have to wait for this. But there's no doubt at this point, right? And Elon has said that the energy business is going to be more than the car business. So at this point, you're pretty confident about that.
I am. And, this analyst has done his numbers clearly. And, if Tesla have done a good job of briefing him, they've briefed him with these numbers because these numbers are published numbers. They're not secret. So, yeah, I think that we're going to see a massive increase in energy revenue and profit.
Okay. So what's your prediction then? You're thinking that there's going to be another mega pack, at least one, announced this year?
Yes. I think there'll be a mega pack factory announced. I've been saying this for a while. I think that we will see a mega pack factory in Europe this year.
Gotcha. If you show again that slide that it says something about in something in relation to cash flow, do you think that Tesla now has the cash flow to be able to continue pursuing this faster, or are they reserving
they have the cash flow for sure. Actually, I should
see. It says here, right? We expect our pace of investment to scale with operating cash flow growth. So is that why?
You may remember, Herbert, we did a cash flow slide. We've done a few cash flow slides, but I definitely have allowed, this is $28 billion of investment they've made to date, but they're targeting on 150 to 175 billion.
Okay.
So in my cash flow projections, I showed this year 10 billion before they even announced that they'd increased it to 10 billion. I showed that, but I showed scaling up to 15 and 20 billion. I'm a little miffed by the fact that in their 10K, and somebody pointed this out to me earlier this week, in their 10K, they actually talked about the investment being at 10 and 11 billion this year and next year, and then starting to fall thereafter. I don't think it's going to fall. I think that every year they have revised upward their capital investment. And looking at this slide, I am certain we're going to see a further increase in capital investment in the coming years. I think we'll be at the $15 to $20 billion rate of investment within 2 years.
Yeah, thank you. I knew you knew the cash flow. We have done shows on this, and you're pretty bullish. You've calculated how much cash flow Tesla's going to have. The question I have to you then is, where are they going to spend that cash, right? And they need to spend more in AI. This AI boom is real. You've heard these big, giant investments by all the major Mag 6 and others, massive amounts of money being thrown at this. At the same time, the battery energy storage unit is very important for AI. Elon's remember saying this, right? That when you build out these data warehouses, if you look from, he said, when you look from the sky, the space.
I don't want to get too technical, but the amount of power requirement for these very large training computers is gigantic, and it's extremely difficult to get interconnects, to get supply to these huge data centers. And the solution lies in in converting natural gas into energy. And that means that you don't have to interconnect to the grid. And it's interconnect to the grid that's delaying a lot of these activities. That's some of the uses of the battery packs anyway, is to avoid people having to interconnect to the grid. So what you're going to see is, an enormous amount of focus on infrastructure and energy infrastructure. And so I am convinced that we're going to see a tremendous expansion in the use of batteries, a tremendous expansion in the rate at which batteries are being implemented, and a tremendous expansion in order to support this compute power that we're going to need. And it's only going to grow.
No, that was my question. It's like, clearly Tesla needs to invest more R&D in AI, but the battery, the energy storage is actually critical for the data warehouses. And so they will, like you just said, double that, triple that, right?
I don't know whether Tesla would want to recalculate this 1 terawatt or this 240 terawatt total battery component required, and whether they wouldn't want to revise upward their target of revenue of production because of the training compute that we now appear to need. Time will tell whether the training compute will fall somewhat as we become better and better at this game. But at the same time, there's only going to be more AI, there's only going to be larger models. So it's the better they get at it, the lower the power supply, but the more they'll require. So I think the game is on. I think it's just going to be endless expansion for the next, couple of decades.
Well, what's your thinking then? Why they've been delayed? Okay, and I don't know if it's true that they've been delayed or not, but Lathrop took a little bit longer, I think, than what people thought to get to scale. They've announced Shanghai Megapack factory, but why haven't they announced yet another one?
We in the Tesla community have got we have this propensity to hear an announcement and immediately think it's happened. I don't have to remind you about, some of the conversations we had, some of the earliest conversations we ever had. Tesla is all about AI and all about software, but their business is based upon molecules. They still have to put physical goods together, and it takes a lot of time to plan, to organize the supply chain, to get the factories built. And so heck of a lot happens before they sign and they announce, and then a heck of a lot happens before the factories are built and they get out there. So it's our impatience rather than their delays. It's our we're so used to, in this modern age, the time between the announcement and the actual software becoming available to be a very short period of time. But when you're moving molecules, it just takes longer.
Yeah. So in the fourth quarter earnings call, they shared these numbers, and we were pretty, I think some people were a little bit disappointed, but certainly big numbers for energy. Then they've said that the following earnings calls and later they'll actually start reporting on this because it's going to start becoming even bigger and bigger. When do you think that that people, investors, will actually go, oh my gosh, okay, what level milestone does it have to hit before people go, this is not just an auto company anymore? So right now, what you just said, 6%. Does it need to be 10%, 15%, 20%? And when will that happen? 2 years from now, 3 years from now?
I think it's 2 years, because I think they have to be surprised by these earnings
Yeah.
accumulating, these reserve earnings accumulating. I don't know if you remember my graph that shows the reserves, the profits going up dramatically, and it's in the second year.
Mm-hmm.
So, sorry, in the third year, which is 2 years from now,
Yeah.
that it really comes to pass. Because from what I've read so far, it's about a 3-year payback.
Mm-hmm.
And there are a lot of assumptions behind that, so it's difficult to know. And I'm sure they will hone in on that business a lot better. And customers may be prepared to pay more upfront once they get, true experience from the field of how these batteries are performing. So bottom line is, I think at the end of 25 will be the kind of, oh, gee.
What would be the percentage? I know it's hard to do because you're saying two numbers are both going up and all that, but what would be the percentage of the auto, the total amount? Still be around 6%?
No, I think that by the end of 25, we are going to be tipping at the 15% mark.
Okay. Yeah, there you go.
That's where I think we'll be. And that's off the top of my head. I can do some, I can do some serious paperwork for you and come up with a number. But I think end of 25, I think in that last quarter, I think we're going to see that 15% mark.
Yeah.
Now in 26, we're going to see an explosion of auto revenue, but I think we may see the same in battery revenue. So 26 is going to be an incredible year.
Do you think the stock price today, what percentage of it is being attributed to energy already?
Zero.
Because you'll hear some of the institutional analysts that I've spoken to, and they'll go, yeah, it's already baked in. So unless they surprise me, it's already baked in.
I saw this in some of the valuations I saw, but the numbers that they're assigning for energy are trivial. I mean, literally trivial. And so they say, there's $8 a share, or, $30 a share, or $25 a share. I mean, they have no clue. I mean, if they looked at what 1 terawatt hour would produce by way of revenue, I mean, it's a lot of money. It's like $571, let's say $600 per megawatt hour, per kilowatt hour, sorry. And we're talking about 1,000 megawatts. I mean, you're talking about, a business that's hundreds of billions of dollars of revenue and many tens of billions of dollars, maybe even $1 trillion of revenue, and maybe even, $300 million. It's just very large. And so it's just laughable what these guys are saying.
Very cool. Wow. Okay. Larry, thank you for educating us on energy. This is one of those things where we've done many shows on energy. You've been big on this, but it finally starts to, come into even our investors.
Well, I promise I'll hone these numbers down, and rather than give you rough numbers, give you something to really chew on.
That would be important for investors to know that by the end of 2025, which is literally 2 years from now, that if it's 15%, that's an energy company. And then how it can accelerate even faster after that.
Yeah, I mean, 15% is nothing. I mean, once it really gets underway.
Yeah. And then if you add one new factory per year, but I'm just thinking in my head, why would they build more auto factories? Why not just build energy factories? I think they have to build both. I think they go hand in hand. I think they have to build both. Okay. Well, like I said, though, AI, we're a robotics AI company, right? And the AI part is the thing that's booming, and you need these with data warehouses. And so you can imagine Elon going, I'm going to build the largest data warehouse out there. It's going to require the most amount of battery packs to power it. And we're going to be the only player that can afford this and be able to build it, Yep. It'll be interesting.
An exciting future.
Okay. Thank you so much, Larry. Follow him on X, Tesla Larry. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.